Hello, and thank you for attending this Capital Magnet Fund Performance Report completion training. This module will cover rental projects. We will begin our training from the landing page of the Awards Management Information System, or AMIS. From here, we will navigate to the CMF Performance Report through the CMF Performance Report tab. If you do not see the applicable performance report listed here, or you need additional information as to identify the correct performance report, click the Go button and that will retrieve the full list of performance reports, along as provide some additional details, such as the associated award year. As you can see, this test organization here has a number of CMF performance reports. After clicking the performance report link, we're brought to the performance report detail page, and we will begin to create our rental project record. From the projects link, you can hover or click and proceed to click New Project. From the record type dropdown, select Rental Housing and Continue. All fields with the red bar adjacent to them are required fields. We will begin by providing a unique user-defined name to this project. For our demonstration, we will name the project Rental 1. This particular project will be a multifamily new development, and for the primary finance type, we will be providing construction financing. You can indicate the number of jobs created and the number of non-construction jobs if that information is available. You must indicate yes or no if other CDFI fund program funds are being used in this development. For this particular case, the answer is no. Next, we will indicate other sources of federal funding, excluding Capital Magnet Fund. For this particular development, the Home Investment Partnership Program funds will be used in the development, so we will indicate home here, and there will be 100,000 home dollars. Additionally, there will be low-income housing tax credit involved with this project, so we'll indicate yes here for the use of LIHTC question. We'll move along to the use of CMF Award and program income sections. This is where we will report our commitment to this project. For this particular development, we are committing the Capital Magnet Fund Award in the amount of $100,000. And no program income is being committed to this project. So we will leave the commitment of program income fields blank and report our commitment under the amount of committed CMF investment field. Next, we will report the projected units of this development by the income category to which those units will be restricted. For this development, there will be 10 affordable rental units. One of those will be restricted to extremely low income families, or those at or below 30% AMI and below. There will be 7 of the 10 restricted to very low income families, or those between 30 and 50% AMI, and then the remaining 2 of the 10 units will be restricted to low-income families or those in the 50 to 80% AMI range. There will be no other eligible families or those in the 80 to 120% AMI range, and none of the 10 units will be non-eligible. Next, we move along into eligible project cost sections. Owing to separate compliance tests, you have to break up eligible project cost for the development in a few ways. For this particular development, we are predicting that forecasting that there will be $1 million in total eligible project cost. The sources for that development include 100,000 CMF dollars and 100,000 home dollars, so 200,000 public dollars And then the sources paying for the remaining $800,000 in eligible project cost, there is $700,000 of LIHTC equity. And then we as the recipient, we are a CDFI making a $100,000 loan to this development. So the remaining $800,000 will be reported as private sources. Of our $1 million in total eligible project cost, the entire development is $1 million and 100% of those costs are eligible. So we do not need to indicate here that any of the costs are non-eligible. If there were market rate units or perhaps finishes that were, and some of the units considered luxury items, some of those costs may need to be reported as non-eligible, but for our particular development, 100% of the development costs are eligible. Next, we need to break the $1 million in eligible project costs up by the income category of the units to which they are restricted. For this particular development, as mentioned, there's $1 million in eligible project costs. There are 10 units. In this particular development, it is appropriate to go ahead and divide those eligible project costs pro rata. So each unit will have $100,000 in eligible project cost. As indicated above, we're projecting 1 extremely low income unit, 7 very low income, and 2 low income units. So we will go ahead and report that $1 million in cost pro rata to the number of units for each income category. Except you will notice one difference here, that we no longer have the extremely low income cost category, and that is correct. The CDFI fund is no longer collecting eligible project cost specific to those units restricted to extremely low income families, or ELI. As such, we will report projected eligible project cost for both extremely low income and very low income families in the very low income cost category. So 8 of the 10 units or cost for 8 of those 10 units will be reported here in very low income. So 80% of our $1 million, $800,000 in eligible project cost will be reported in the very low income families category. And then the remaining $200,000, those are associated with low income units. So we will report the remaining $200,000 in the low income families projected field. This comprises our $1 million in total eligible project cost. So we will report zeros in the other eligible and non-eligible family categories. I skipped over the eligible project cost and recipient level leverage, eligible project cost for recipient level and enterprise level leverage fields. So we will return here to complete these 2 fields. If you are a 2016, 17, or 18 CMF recipient, you will use the projected enterprise or eligible project cost recipient level leverage field. If you're a 2019 or 2020 CMF recipient, you will use the enterprise level leverage field. For some CMF recipients, there is a performance goal associated with the recipient level leverage. And while there is no performance goal associated with enterprise level leverage, this is a data point for which the CDFI fund is collecting information on. So this particular award, it is a 2017 award, so we will use the recipient level leverage field, which consists of the CMF investment along with any enterprise level capital, which is capital that is earned or raised by the recipient organization that is not tied to a specific project at the time it is earned or raised. So for this particular project, as mentioned, there is a $100,000 CMF investment, and then the organization, being the CDFI, they are investing $100,000 of their own dollars into this development. So we will report $200,000 in the recipient level leverage field. Had this been a 2019 or 2020 CMF award, we would just report that enterprise level loan from the CDFI. That $100,000 would go here into the projected eligible project costs, enterprise level leverage field. One final note is to just keep in mind that recipient level leverage, enterprise level leverage, these are exclusive of the eligible project cost by source and income category fields. So yes, you are reporting the CMF investment and the CDFI fund loan essentially twice. It's included here in recipient level leverage, and it is also included in these two breakdowns, and that's okay. What really matters is that our eligible project cost by source and eligible project cost by income category, both of these sections total up to total eligible project cost of $1 million. Before hitting save, optionally, you will notice a new impact narrative field at the bottom of the page. If you so desire, you can provide a little bit of narrative about this project and the impact it is having in your community. After hitting save, we will wait for this confirmation message to pop up, validating that there were no errors in the performance report or in the project record. Next, we will proceed to create a project location for this rental project. That is what this warning flag here has popped up for. It's indicating that there are no project locations associated with this project. If we hover or click on the project locations link, we can then click new project location. If the particular project just has one address, then that's fine. You will only need to create one project location. However, if this is a scattered site rental project, that is the purpose of the project locations module or tool. It will allow you to report multiple locations associated with one rental project. For our development, there is only one site, so we will go ahead and proceed with creating this one rental project location. Provide a name for the site, Site 1. All 10 of our units for this project are at Site 1, and there is $100,000 of CMF that will be invested into the project at this site. Next, we will indicate the address for the project. This particular development is at 925 Riverside Drive in Reno, Nevada. For the project's location and project coordinates, you can leave those fields blank, and we will hit save to ensure our project location saves successfully. New this year, you will notice a geocoding status field, or the ESRI callout. Here it's indicated that the callout or the geocoding process is scheduled. Typically, that process will occur within 24 hours, and until that process does run, none of the geographic information associated with that address will populate. So you will notice the system does not know yet that this project is within the approved service area. We also do not have information as to if this address qualifies as rural or an area of economic distress. After entering an address, it is recommended that you check back within 24 hours to ensure that the address properly geocodes and populates this geographic information. If it does not, an error message will appear here that will generally provide some additional information as to what went wrong with the geocoding. Perhaps an incorrect zip code or city or state were entered. Now that we've completed our project location, we will return to the project record. You will notice that the warning flag has since disappeared. And now that we have created the location, the project record, finally, we will need to create one more record for this project, and that is the CMF project annual report. An annual report will be created every year on this project record through both the investment period and the 10-year affordability period of the project. If you hover or click on the CMF Project Annual Reports link, you'll then click Create New Annual Report. As no prior annual reports exist for this project, a blank annual report template will appear. However, if an annual report had been previously created, the system would clone those details, bring them up here on the edit page for you to update and adjust as necessary. For the project status at fiscal year end, we will indicate the most developed or advanced status of the project as of the end of the recipient's fiscal year or the reporting period. This particular project, it is only committed at this point. The construction is not commenced, so the CMF funds have not been drawn down. Investment or affordability. If the project has started its 10-year affordability period after being placed into service and achieving initial occupancy, you would mark it as affordability. If the 10-year affordability period has not yet started, you will indicate the project is in investment. Proceeding to the project dates. As mentioned, the project is only committed at this point, so we will fill in the date funds committed, and we will leave all other dates blank. Next, we'll move into the use of CMF Awards section. This is where disbursements and other information on the investment will be reported. Had funds been dispersed to this project, we will go ahead and update some information to say yes, funds were dispersed. We would report our disbursement in this field. We committed $100,000 to this project, so we will also report that $100,000 as dispersed. If it was program income being dispersed rather than the initial deployment of the CMF award, that disbursement would be reported down here in the disbursement of program income fields. Similarly, if we made a short-term construction loan and that loan was paid off, the capital returned to us, we would report earnings of program income in the form of equity loan repayment and interest income optionally in these two fields here. Moving back up to our disbursement section, we will next indicate the type of the disbursement. This particular investment is debt. Our construction loan was issued at the rate of 5%. And new to this year, we will indicate the origination fee associated with the CMF loan. As indicated, we are a CDFI recipient for this particular test example. We're making a $200,000 loan to the project, $100,000 of which is the CMF capital, and the fee associated with that loan is $500. Finally, for this section, we will indicate the eligible activity. For this particular project, this is part of a revolving loan fund. Be sure to mark the appropriate eligible activity here and also the activity for which your organization is approved, as outlined in Schedule 1 of the Assistance Agreement. If you indicate an eligible activity here for which your organization is not approved, this will result in a non-compliance flag popping up when the scorecard is generated before report submission. Where on the project record, we indicated projected eligible project cost. Here on the annual report, we will indicate final eligible project cost. While construction is not complete, so we don't have the final cost for this project, had the construction been complete and our total cost came in as projected, right at $1 million, we could then proceed to fill in these fields. For purposes of the demonstration, we will go ahead and do so. As mentioned, we have $1 million in total eligible project cost. There are $200,000 in public sources. a $100,000 CMF loan and $100,000 from the home program. There's $800,000 in private sources, $700,000 of that being LIHTC equity, and the other $100,000 being the loan from the CDFI recipient. The $100,000 CMF loan and the $100,000 loan from the CDFI both count as recipient level leverage, so we will report that $200,000 in the recipient level leverage field. Had this been a 2019 or 2020 CMF recipient, we would report the $100,000 CDFI loan in the enterprise level field. Next, we will report our eligible project costs by the income category of the restricted units. So we just need to break up this $1 million in eligible project cost by income category. For cost, the costs associated with extremely low income and very low income units all go into the very low income category. So we have 1 extremely low income unit and 7 very low income units. So all costs associated with those 8 units will go here into very low income families dollars. So 8 out of the 10 units, or 80% of the cost, being $800,000. We have 2 low income units, so 20% of the cost will be reported in the low income family units. With zeros going in the fields for other eligible and non-eligible families. Please note that eligible project costs may not always be divided pro rata based on units. If the units have different finishes or of different sizes, based on the income restriction associated with them, a different method for allocating those costs may be appropriate. If you have any questions about this, we encourage you to submit a service request to the CDFI Fund for technical assistance. Next, we will report the rental units that are complete as of the end of the fiscal year, and also the units that are placed into service. As mentioned, this one is project undergoing construction. We do not have any completed units to report, nor any occupied units to report, so we will leave the fields blank for this particular performance report or this annual report. If the building was placed into service, you will note a new field here for out of service units. So if there was a affordable CMF unit that was not able to be leased or rented out otherwise for the recipient's most recent fiscal year, you would indicate that here in the out of service units field. We'll hit save and await for confirmation that there were no errors on the annual report record. And we receive confirmation that the record was saved. Before submitting the performance report, I'd like to point out a few reports that are available on the to our CMF recipients that may aid in reviewing some of the information reported. As you continue to report on this project year after year, creating your CMF project annual reports, you may find this project annual report link to provide some useful information available here from the project record. If we click the link, an Excel-based file will download, and we will open up that report, click through any error messages that may pop up, and you will see here in the report all of the information that we just entered in the annual report for the current period. If we move to the performance report detail page, you will also find a rental project report. Once again, if you click that link and then open the Excel file that downloads, click through any messages that may pop up, you will find a list of all the rental projects under this given performance report. We only have one, but this here is our rental one project, and you'll see all of the details that we just entered. This report may be useful at the end of the year to reconcile any information reported in AMIS to internal systems of record. Now that we have created our rental project, we entered the project location and also created the annual report. We'll notice here the other project associated with this performance report has an annual report created. So we are ready to proceed with generating our scorecard and submitting the annual report. The scorecard provides some high-level information about the recipient's performance. So if you choose, a number of the details we just entered will roll up here to the performance report detail page, providing very detailed information on this report. So you may recall we reported $200,000 of recipient level leverage. So we can look here and see that apparently there's another $15,000 associated with that other project, but we are projected to have a recipient level multiplier of 0.22. When we have a requirement of 10. So we certainly need to invest recipient level leverage in some more projects to be able to achieve this benchmark. We'll proceed to generate our scorecard. Please be patient as this may take some time to appear. As mentioned, this will provide a high-level overview of pass, fail, or monitoring not yet due. For this particular benchmark, you can see that the recipient benchmark no is not approved for rental housing, but we just reported on a rental project. So in the event that a performance goal is failed, you will be required to fill in all of the non-compliance explanation fields before submitting the report. Once a report is submitted, it will be locked until reviewed and approved by the CDFI fund. Once approved, the report will roll over to the next reporting year. You can see here we are currently in reporting year 2020. So once submitted and then reviewed and approved by the CDFI fund, this will automatically roll over to reporting year 2021, and the CMF recipient will be able to continue or start entering performance information for the current reporting period. If you have any technical questions or need support, the service request feature in AMIS is the best way to reach out to the CDFI fund. If you do not see the service request link here, click the little drop-down arrow and you should see it here in this list. After clicking on the service request tab, next you will create new service request. For the program, select Capital Magnet Fund. Use the magnifying glass to look up the specific award for which you have a question about or need technical assistance. You can leave the status and service request origin fields as they are. Set your priority for the service request of low, medium, high, and finally provide a subject and detailed description before hitting submit. This concludes this module on reporting, CMF reporting for rental projects. On the CDFI Fund's website, on the Capital Magnet Fund page, Step 5 for compliance and reporting, there is a comprehensive reporting manual available that will provide step-by-step instructions for reporting. Additionally, you may reach out to the CDFI Fund for technical assistance at one of the phone numbers or email addresses listed at the bottom of your screen. We thank you for attending this module on rental project reporting.